Hey, good morning, guys. This one is a subscribers only stream, right? So I know some of you guys are new from the Black Friday deal that we just did, and I know you haven't probably had a chance to, go through all the education and all that yet, right? So I want to kind of dumb this down, not in a disrespectful way, but just knowing that some of you won't understand some of the terminology, right? So in the grand scheme of things, right, I know a lot of you are either kind of transitioning into, Forex and prop firms and what we've been talking about. A lot of you guys are still looking at the smaller time frames, right, which is part of the reason we've gone and done, the prop firm stuff, the 1 minute kind of channel, the conversation around, this. In the grand scheme of things, right, it, I guess for myself, for Paul, when you look at what we trade, right, and the way that we trade, there's an awful lot more money to be had for an awful lot less work, right? Now, this is something, when I started having, golf lessons and I become very good friends with the pro, right? And the one thing that I just couldn't get my head around, I was a rugby player, I was quite strong, in the grand scheme of things, for me to hit a golf ball a long way was all about, how much power can I put into the ball. This guy was kind of half my size, a very slight guy, and he was knocking the ball a lot further than I was, and I was like, how? I think when you realize that kind of less is more, it's about the rhythm, right? It's the consistency. It's that kind of the repeating of the process, kind of over and over again. In trading terms, is this there's no real difference, right? It's you're not trying for kind of max power. What you're actually looking for is that kind of consistency. The consistency comes with understanding the individual components, right, of the swing, right? So this is obviously great in terms of how you start. Now, for some of the questions that I have, and I know there's going to be fear, right, and especially if you're newer, there's going to be fear in the sense of, oh, I'm missing the move. Oh, the move's gone. Oh, we said it was going to go to this, and it's gone up a little bit more. The problem with, right, and the reality is when you look at what it's doing, right, there's one of the lessons in the education section. And even if you go straight after this video and just kind of, make a beeline for this video, right, talk about the candle stories, right? So just to give you a kind of a quick idea, right? When you have a candle, like this, right, and this is obviously a bullish candle. If you have the next bullish candle, right, that looks something like this, right, or potentially even down with a bit of a wick, for example, right? What you have to ask is what's actually going on, right? We've had kind of massive bullish momentum, right, followed by a lack of interest. Now, the lack of interest, it doesn't mean that it's not bullish, right? And it doesn't mean that it is bullish. But the point is, the candle is trying to tell you something, right? Now, if you add volume on the back of this, the chances are this volume is quite high. This volume is going to be mediocre. So, in essence, what we're saying and what we're seeing is at these low prices, right, in say the first 50% of the candle, probably the volume was created, right, which basically means there's lots of interested buyers at this price, but less so at this price, right, which means this has gone up artificially, right? Now, the point being is when you understand, what the candle itself is trying to tell you, right? And in the video that I just said, go make a beeline for the candle stories, right? The way I look at this is think of this almost like a football pitch. Right? I've got a football pitch here. It doesn't matter what goes on inside the candle, right? We could have inside the candle, we could open here, right, or open down here. The price could obviously kind of rally up. The price could come back. Price could rally up. Price could come back, rally up, right? Potentially come all the way back down and rally up for a close, right? The only important part is the end, right? Now, obviously, at this particular point, the suggestion is the buyers are winning. Now, I'm on a weekly Bitcoin chart. I know, again, a lot of you have come on the back of Bitcoin. A lot of you are looking to trade Bitcoin, right? So keep in mind what I've just covered, what I've just said. Before we stick any kind of volume on, I wanted to think about a couple of things. Right? We've got moves like this here, right? We then had the BlackRock kind of fake out news. And after the BlackRock news, we've had these candles that have done what? Right? These couple of candles here. These candles, right? They've been pretty small in comparison to the prior moves. Right? That's the first thing. The second thing is we've kind of ground up, right? Which means if this was massively bullish, and we see in this now as a potential 3, because I know some people have said, oh, well, the 1 was in, the 2's come back. We'd be expecting the 3 to do this, not this, right? There's a bit of a difference. So the candles themselves are definitely trying to tell the story, right? Now, if you couple a couple of other things in, now again, if you haven't understood, you're not quite sure, you're not up to speed with COT, there's a video on that as well, right? The way that I'm going to dumb this down, the way that I'm trying to explain this in basic terms, right? There's 2 main areas for me when it comes to Bitcoin COT, right? Now, you could argue that we stick this into the commodities, which means the commercials are obviously interesting as well, right? But I think in terms of the transition right now, I don't think we are fully pledged in terms of it being a commodity just yet, right? So in the grand scheme of things, if you look at the asset managers, right, and think of them like a 200-day moving average, right? The reality is the price and the buying, right, will move up together. But these guys are very long term type holdings, right? So it doesn't matter whether the price is above or below. It's just a general bias, right? So the way that I would read asset managers right now is that there's definitely long-term interest, right? And that's all you need to know, right? You don't need to go into, oh, what's the details, what's the numbers. Forget all that shit, right? The reality is less is more, right? Go back to the golf analogy. If we now come into the leverage funds, right? This is where the leverage funds, it's kind of as it says on the tin. These are large players, right? And this isn't the whole market. This is only a sample size from the US, right? So there's going to be, companies in the UK. There's going to be companies in the Middle East. There's going to be companies in Asia, right? The reality is this is a good enough sample, right, to actually get a clue in terms of what the bigger players are currently seeing, right? So although this is going to be completely different if you were to put all of the view together, right? This is a good enough size to say, are we long, are we short, right? These guys are using leverage to trade against retail in essence. Right? So the thing is for me, retail is grinding the price up, right? We got the halving coming, we got the BlackRock news, we got everybody's kind of anticipation, and ultimately we've got Muppets like Plan B, calling for the moon every little swing up, right? Now, I've just gone through the candle story and how the candles tell the story, right? If you now look at the COT from the leverage funds perspective, right, we've actually increased. If you do higher highs and higher lows, right, we're actually increasing the shorts, which means somebody, i.e., composite man, big players, the guys with leverage, are more than happy to sell to the retail crowd that are all screaming, let's go to the moon, Lambos for Christmas. Right? So if this isn't a good enough, area to look at, then I don't know what is. In the grand scheme of things, there's definitely buying going on. But it's this buy-in right now that hasn't one crossed over, which means on a shorter to medium time frame, given asset managers are 5 years, 10 years, 15 years worth of a holding period, the leverage funds being a shorter, so think of these like a 200 over a 50, right, in terms of a moving average. If you look at what we're doing with the COT data right now, we're relatively flat on the buy-in. So the main question you need to ask yourself when you come back to the chart is, who is selling and who is buying? Well, we've just categorically saw that the leverage funds are the guys selling. We ultimately know that retail is going crazy wild for Lambos for Christmas. So the answer's in there. We've actually got retail buying, small quantities at a time, and the big boy saying, thanks for paying the premium. So when we couple all of these things together, we've got this kind of slow grind up, and nothing's really happening. This doesn't feel, this doesn't look, this doesn't see any kind of bullish intent. And as I said this morning to one of the questions, if you really deem this as a bullish move, I'd sell all your crypto right now, because crypto's going absolutely nowhere. And I've talked about the various versions of the moves and so on, because I know Paul said something in one of the channels yesterday about the moves. You'd have to see a move. Right? You can't pick and choose these types of moves. If you were to do an Elliott play on something like this, you've got your low, you've got your 1, you've got your 2, you've got your 3, you've got your 4, and you've got your 5. That's marked out in there, which means we had a pullback 2, we've had a 1, we've had a 2, we've had a 3, we're likely to see a 4, we're likely to see a 5. The issue for me is that's a 1. That would be deemed as your 2. And your 5, we'll do the extensions in a second, your 5 would mean that the impulsive move 3, which, okay, granted, this is impulsive, right? This is all green candles, which means if this is 1, 2, 3, 4, and 5, we can actually now go and do exactly the same thing internally and go 1, 2. What have we seen with 3? We've had a hyper extension 3. We're going to get a pullback 4, probably somewhere in this region here, back at the 30k, and we're likely to take out 5 up to this level here, 42. So this would actually be a larger scale 3. Okay. Then what we'll do is we'll put now the next, let me get rid of this, put the next level on, right? So that would be deemed as you were move 1, pull back 2, 1, 2 nested, 3 up, 4 down, 5 up, giving us the larger scale 3. What we'd like to see then is a move that would give us something along these lines, where we'd end up with, right, we're not going to get there because we're already truncated based on the prior move. Let's just assume that we do get there, right, and we move this up slightly higher, just for, sanity's sake. We're likely to come back 4, right, which would be in the same kind of region as the current volume. So we're going to put this into a box rather than a circle. And at this particular stage, what you'd expect to see is your extension 4 taking us up to the current all-time high. And I've said this for the last 18 months, right? If you've been a subscriber, you know I've covered this a million times. This for me is the brutal scenario. And ultimately, if we look at that, is that a move that actually excites you? I'd rather go trade Forex all day long. I'd rather go play golf instead of trade that shit. Because the reality is, we're back in a similar position where we've got almost a one-to-one type trade. Because if you were to put that on as a trade right now, you'd be looking for a move, right? If we say, let's go long, we'd be looking for a move. We'd have to come shy of the levels, right? So probably go 62, 63 just to cover my back. And we'd need a stop loss down under here. So for me, that's a pretty shitty trade in anyone's books. Even if we said, well, let's wait for the pullback, that's still a pretty shitty trade. So in the grand scheme of things, part of the reason that I don't deem this as bullish is we've got BlackRock and a halving, and the max kind of projection on this would actually be up to 65k. All of the logic is sitting here, right? There's nothing outside of what I've just covered, and I want to challenge people. Right? I want not just you guys in terms of subscribers. I've asked this to the general public. I've put this on YouTube videos. I've put this on TradingView videos. I want you to come in, right, and give the same breakdown that I've just given, as in why I don't think we are long here in the grand scheme of things. What I want you to do is to come back with a bullish argument that doesn't include the halving or BlackRock, and turn around and say, I think we're bullish for this reason. Now, I've talked about a couple of things, right, over the last couple of months. And again, if you're new, you obviously haven't had a chance yet to go see some of these videos. Talked about this back in October. Fake run on liquidity, where the heavy liquidity is sitting. We've done absolutely, we've ground up to this level. This fake run on liquidity is exactly that. We're going to get probably a little spike just above it, just to get everybody going, oh, we're off to the moon again. And then we're probably likely to just drop. When we get these ascending moves, and you'll see these time and time again, this is the intent for a drop that looks like this. So the more aggressive the buy-in by retail, the more relaxed the sell-in by the large institutional players, the more aggressive the drop is likely being when all of that demand, because retail are not going to have the same demand that ultimately composite man has in terms of his supply. Okay, so you've only got to make the math work, right? And I'm not talking $47 million of Bitcoin. Oh, the math checks out. The reality is, if you do the math in terms of what's going on, we got retail buy-in, composite man selling. Composite man clearly has deeper pockets than all of retail combined. And ultimately, we've ground up to a level of a fake out run on liquidity. It's like that. You put the COT data in, you couple it with the Elliott swing, even down to the angle. I mean, you've only got to look at that. For me, is what I would deem as impulsive. That doesn't scream any kind of impulsiveness at all. So the reality is we're more likely some kind of ABC down, giving us a larger scale A, some kind of B up, giving us an ugly B because this definitely looks corrective rather than impulsive. And then overall, I think we get probably a 618 or a 1 of the full move, right? So potentially something that looks like this, or potentially something that comes back into these areas. But you'll assess that when we get there. That isn't a kind of a doubt for me. That's just a couple of things that are just all aligning right now. And I understand a lot of people will say, the price has gone up and you say it's going down. I'm not saying his price is going down. I've said for the last 18 months, we are going to be accumulating. When we called, the move here as reaccumulation, the drop down, they blew up the rocket. I really didn't like this move. By the time we got here, it was obvious that this was going to be truncated. Get the truncation, this is where people like Plan B were calling 135K. We dropped down, you could see the trend line break as clear as day. All of these things, guys, these are not lucky guesses, right? This is understanding what the market, what the charts are trying to tell you, right? And at the moment, this is what the charts are telling me. So, in the grand scheme of things, when we put all of these things together, right, we just look at some of these levels. This was going back a couple of months. Talked about this, right? I genuinely thought we would come up to this kind of region, right, with a push this region. We've basically come to the region, right? We've gone, so if you come into a smaller time frame, you'll see a bit of sideways action here, right? And you could see the price kind of here on a very small scale, right? You kind of think, okay, then we had that fake BlackRock pump. And after the fake BlackRock pump, we've done pretty much nothing, right? And when I say nothing, if the BlackRock pump took us to 35K, we currently at 38, even if we tag 39, a 3 or 4K move on Bitcoin as a whole is tiny. We've got a large master pattern up at 39.8, right? So 40K. We've actually got a top zone. This is where all of the liquidity would be sat at 42K. So, I'm not saying rush out, go sell Bitcoin. I'm saying go short Bitcoin. If you've got Bitcoin held from, very low on, then be my guest. Sell some off and have a nice Christmas. That's the beauty of this. You're not in any rush. You're not in any kind of need to go trade every single, every little swing, every little move. And that's kind of the point. Some of these levels, look, right, this is the master levels. I've talked about this for, again, probably the last year. Where do you think we're searching for? And I just talked about 42, what was that one? The 42, 42.3, right? We've got a 43.8. So in essence, somewhere along that region would potentially be, completely maxed out. And at that stage, if we get there on this move, I probably would go leverage short all of the way, right? Whatever accounts I could get my hands on, because at that stage we're coming back down to 19k, right? And probably less than 19k. So in the grand scheme of things, all you need to think about is how we getting where we getting, right? All of these things that I've put on here, these are, 6 months, 9 months, 12 months, 18 months in terms of some of these. You go back through the musing channels, you'll see all of these types of posts, right? All of these things here, look at where we are. This isn't just me going, oh, well, it's this or it's that, or I think it's going up a little bit more and then down. This is actually providing every little ounce of logic as to why we're not, impulsively bullish right now. Footprint key levels. Look at the key levels. We've come down, we've tested liquidity, right? We didn't get, this is the blue one. This is what we didn't get, which is why where all the liquidity is sat is down here, down in this region, right? We didn't test it. We've rallied up, right? We've come back down. We've grabbed the liquidity from this region and gone up straight to the next region. We've ground up and straight up to the next region. These things are not by chance. These levels are not, oh, let's just go, there's a level. Understanding what's going on is part of the learning process. So I'm not trying to say, hey, you can't go and buy this if you don't want to buy this. But I genuinely feel if this is what is deemed as bullish, crypto as a market is in absolute trouble. And I think, such trouble that if we go and see, 42 plus right now, I think the results of the BlackRock ETFs will be all negative. All of the ETFs that are January, February, March, April next year, they will be negative. The SEC will find something. And this is what the market, when people say about the news is already priced in, right? Now, my biggest fear on that particular point is that the BlackRock price, even post approval, let's just say we do get approved, is the price is already priced in. And if the price is already priced in, again, we're back to we're in trouble. So for me, at the moment, there's no real upside to a long position, and there's no real reason to go short Bitcoin. This is part of where you sit on your hands, you understand what's going on, And let me show you one more thing before I finish this off, right? I just wanted this one to be, it's just a little bit of common sense, right? Especially for you newer comers to this. Let's just use this one here with Voice Wave chart, this one. Oh, one. Let's do Voice Wave again. I'm not going to use any of the Mayfair ones, just to show that you can take one off the shelf. Let's just do the volume there. Yeah, there we go. Right, this is pretty, let me get rid of this. This is pretty bog standard stuff, right? Now, the issue that you have is when you come out, let's go to a bigger time frame, to a weekly. I've explained this from, writing this in the book all the way through to, what we see in the streams, what I've explained in the last, again, maybe 2 years plus now. When I use a voice wave, all I'm looking for, right, is seeing an Elliott bias. So if we say 1, 2, 3, 4, and 5, right? Now, I don't care if I'm wrong. I don't care if this is actually the 3, right? Now, and I did say, for me, I still quite like this as a 4 and a 5, giving us a triple top, right? Now, this is something that I've talked an awful lot about, especially early on when we were still up and around, this region coming down. The reason I like this, and the reason that I think that it's still plausible, is although technically we've crossed that band in terms of entering the 1, there's a couple of things that make me feel this wasn't institutionalized. So that's the first thing that's like, oh, well, we can have a little bit of leverage. The second thing is that we actually kind of danced around, right? We had this little tiny bit of movement, grand scheme of things, below it. But in essence, we've kind of stayed above it, which means it wouldn't be at all surprising. And this is maybe where, if we do get, and this is me putting the pieces together in my mind, if we do get a further bullish run on this move, then the truncation could be on the cards, but the truncation could even be as shitty as 55. So at this particular point, the reason for all that is there's going to be liquidity up and above this, which is 48. There's going to be liquidity up probably in that region of 51, 52, and we probably get a little bit of extra hype taking at 53, 54, 55 potentially. When you look at these moves, let me put that back on. When you look at these moves, oops, put that back there. In terms of a Weiss wave, right, the quickest way to identify where you think we are is we've clearly had this bearish move. We had a nested move inside. We had another bearish move, followed by the 3. The issue that we had then is we had technically an ABC down, followed by this move back up. So this is the move down, followed by this move back up, which took us absolutely nowhere. The reason that you could see this was going to be truncated as early as August is that the volume was telling us, we're not interested up at these prices. So again, plan B, let's go to 135k next month. Retail following, and Composite Man saying, thank you very much. You pay more than it's worth. This is like pouring tap water and sticking an Evian sticker on the side and charging 20 euros a bottle. Right? This is all these guys are doing. When you now look at the current move, we now have to compare the volume, and we now have to look at what's actually going on. So we've got a comparable play right now in these last couple of weeks to the current build here. Right? The issue that I have with all of this is if this is the build up and this is the result, it comes back to effort versus result. When we had this level over here, we hit 65k. We got a similar level over here and we hit in 38. And we're struggling with 38. It's 38, 38, 38 and a half. Oh, it might run to 40. But the reality is we haven't breached that and gone flying, right? So the next question you have is, at the end of a large green run, what do we expect next? The issue for me personally is that seeing the effort versus the result, we only need a little bit of red down here and the price comes crashing straight back down because the effort versus result is clear. The results are nothing and the effort is a lot. This goes back to the candle story, right? So I'm going to finish this one today like that. Obviously, if you're newer, take the time. Don't stress, don't rush in terms of going through, the educational content. Please don't just skip to the interesting lessons. Don't think you can stick an indicator on your chart and, it's as easy as that. The indicators were all designed to help you visualize all of this type of stuff. When you go through the interesting lessons, you'll see how you're able to read, volume and all that kind of thing without any indicators. All right. So in the grand scheme of things, just take your time. Don't rush. Don't stress. Nothing you're going to miss. And then from there, just get an understanding of everything I've covered today. And this hopefully will make a lot more sense when you've covered a lot of those videos. All right. Cheers for watching, guys. See you on the next one.